And about a month ago, I had a net 13% of advisors saying they were seeing fewer first home buyers. Now it's back up to a net positive 30% saying they are seeing first home buyers out there again. Well, hello again, everybody, and welcome to another weekly video having a look at some of the things happening in our economy, housing market, and with New Zealand interest rates. Now, as we all know, the housing market has been on a fairly strong downward slope since the end of 2021, when we saw that full-blown credit crunch develop with the tightening of the loan-to-valuation rules that banks had to apply there, and also the Credit Contracts and Consumer Finance Act basically sending banks into their shells with regard to willingness to lend. In the middle of last year, we started to see some positive or at least less negative signs coming along. I talked about the housing market entering its end game from around about July or August, that sort of time period. And then on October 18, we got the surprisingly high inflation number. Mortgage rates went up by about 0.5%. And then on November 23, we had the Reserve Bank scaring the absolute bejeebers out of everybody with a record 0.75% increase in the official cash rate, a big lift in their pick for where interest rates would peak, and a lot of talk about recession as well. And that just scared buyers even further back into the hills, both the investors, first home buyers, etc. And we've seen the likes of dwelling sales running about 35% lower than a year earlier. We've seen house prices go down, and we've seen the stock of listings on the market increase. Not because of a new wave of selling, there remains zero evidence of a wave of people in distressed circumstances looking to sell their property, but because of the lack of buying, and so naturally just the stock of stuff on the market goes upward. And so I've got my monthly surveys there, and I'm trying to get some insight, or at least early insight, into when things may be easing off. And I could see a little bit of it 2 or 3 weeks ago in a couple of my surveys there, but it has come through relatively strongly now in a survey I do each month of mortgage advisors. Now, ahead of the surprisingly high inflation number late in October, I had about a net 48% of advisors saying they were seeing more first home buyers in the market. That obviously fell away pretty tremendously with the monetary policy tightening, and about a month ago I had a net 13% of advisors saying they were seeing fewer first home buyers. Now it's back up to a net positive 30% saying they are seeing first home buyers out there again. And this gels with the result from my survey 2 to 3 weeks back of real estate agents, where they noted that although people still weren't showing up at auctions, there were more people starting to show up at the open homes. Now, why might we be getting a few extra buyers coming out of the woodwork now? Not splashing money around by any means, and the investors are still well backed off from the market there. I would suggest it's not because of any change in people's worries about recession or thoughts about the labour market. It's more about what's happening with regard to interest rates. I made the comment 3+ months ago of being 90% confident that we had seen the peaks in the fixed mortgage rates for 2 years and beyond. And most recently, we have seen the banks cutting their 2, 3, 4, 5-year fixed mortgage rates, while still putting up the 1-year rate a bit in some instances at least, because of some of the extra pressure coming through there. Some of the worst case scenario fears people have had about interest rates are now backing off. And as we start to get that ball rolling, I want to get in early again with a view here, and that view is do not be thinking interest rates are going to be falling in some sort of a big straight line downward, and we're going to see a big falling away as we did after the Asian financial crisis 97-98 or the global financial crisis of 2008-09. I'm still 50-50 with regard to whether we have a recession in New Zealand, and of course that's part of the problem. If you believe firmly we're going to have a deep recession, the interest rates will bucket off. I don't believe that. I still see a pretty strong labour market out there. I see a lot of construction and obviously remediation, reconstruction, infrastructure work to be done following the cyclone, the earlier flooding in Auckland, etc. I see improving prices for some of our export commodities, revisions upward in world growth forecasts, China coming back into the world market earlier than had been expected in terms of tourist flows, students coming to New Zealand, etc. As interest rates go down, it is very much going to be a stop-start a fear. Do not be thinking they're going to plummet away strongly, but I do think in the next few weeks we still will see a bit more pulling away from that worst case scenario, and a few more buyers are going to start entering the housing market. I still don't think we're near a turning point as yet. I'm still broadly guessing that's the middle of this year, but do be aware for first home buyers in particular, I have previously made the comment that this is the best time in a generation for looking to make a purchase with a lot of stock to choose from and hardly anyone to compete against. The clock is ticking for that environment to start changing in a few months' time. All the best out there.